I'm joined today by Tracey Bissett. She comes to us really well qualified to talk about money matters. Tracey educates and empowers individuals, notably young adults and entrepreneurs, to take control of and live their financial lives with confidence. She does this as a financial fitness trainer and as a host of the Young Money podcast. Tracey's also a full-time professor in the financial services faculty in the business school at Centennial College and a former executive at TD Bank, one of Canada's big five banks. She has a master's of business administration and a chartered financial analyst designation. Wow, I'm so glad you're here to help me out. Good.
Thank you. I'm excited to be here. Thanks, Adrienne.
And so there's been a lot of both interest and involvement in day trading that's escalated over the past year. And so a question and a concern has been, is this gambling and how to manage the risk of it? So before we sort of jump into that question, let's just start with the foundations. And so help me to understand some of the basics. What do we mean when we talk about investment and speculation?
Absolutely. So when we're talking about investing, we're talking about taking our resources and putting it into something where we have a hope of getting a better return than the amount that we're putting in. And so we can do things that are very safe. So people saving up for school or maybe saving up for a down payment for their first home or second home, they're going to put it into something where they earn a little bit of money, but they're also not faced with a lot of risk where they might lose a lot of that principal. They're wanting to make sure that they have those funds because they need them for specific purposes. So when it comes to investing, we can get into something super safe, like a guaranteed investment certificate where it's protected by the government. We know exactly how much money we're going to get. And then if we're getting into something that is higher risk, we hope to get a higher return, but we also have to be prepared for the consequence that maybe things don't go well. And so we have to be prepared to potentially lose the amount of money that we're investing. And so it really comes down to what are your goals? What are the things that you're saving for? How much flexibility do you have with these funds? Certainly, if you do have excess funds, it's fun to get involved in some things where you are taking a calculated bet. Like, there might be a chance that things may not go well, but you're understanding that and knowing that your financial situation will not be altered if something negative were to happen. So that's investing, that putting money, usually it's money into something to get that hope of a higher return. When we get into investments that have a higher risk of not going well, so a higher risk of failure where there's a small percentage chance that we're going to get that big hit, but it's very, very likely we're going to see the loss of all of the money we're investing. That's when we start getting into speculation. And so people can spend days, hours looking into stuff to kind of try to hit the right thing. And sometimes they win, sometimes they don't. Usually the people we hear on the news are the people who hit the right thing, but the majority of people are not. And you can't really spend your whole life sitting around doing that stuff either. That's not really how life works. So if we're getting into that really speculative stuff, then it's almost akin to gambling, I would say, because we're getting into where we're convincing ourselves, whether it's through stories we're seeing in the media, things our friends might be talking about, a snippet of analysis where we're not looking at the whole landscape and we're not getting the whole picture, where we all of a sudden feel super confident that this is going to work for us. And if you're kind of feeling that, that's probably a sign that you're getting into something risky, something speculative, something that would be akin to gambling. Because if you don't know a lot about finance, you haven't done a lot of studies on it, you're not following fundamentals of companies, you're not following their earnings reports and all of that stuff. If you think all of a sudden you found the hidden gem, probably you haven't. And so that's kind of a good thing to check yourself on.
And so just give a few examples of the type of higher risk or more speculative activities that people are getting pulled into these days.
So we hear a lot of talk in the news around cryptocurrencies and Bitcoin in particular. Bitcoin's been on a huge run. It has had its fluctuations up and fluctuations down, which is a digital currency. And so that allows people to do that trading without the intermediary of a bank, and it happens in blockchain technology. So we won't wade into all of that, what that looks like, but just knowing that it's not based on anything of value that we can actually look to. We can't look to a history of earnings like we might in a company. So it's all based on how people are driving up the price or not and what is happening. We saw also earlier this year, lots of trading frenzy around GameStop, AMC, in particular shares, and that was not built on fundamentals of those companies. And so people started chatting about things in Reddit groups, and things kind of spiraled. And then what usually happens is, if by the time you're jumping on something, it's probably already over, because if you haven't been on it, you're probably not the first one to know. And so a lot of people were impacted, and it actually bankrupted a hedge fund. So we need to be careful when we're using our money. We just need to be very clear about what are our priorities, what are our goals, what are our budgets, and make sure that when we're investing, whether it be in something safe and secure or something more speculative, that strategy aligns and gets us to our goals, because that's the most important thing. And everybody's goals will be different, which is important to know.
Okay, absolutely. And so I want to hear a bit more about that. Let me just ask one more question.
Sure.
So in my field, the definition that I use, or my understanding of gambling, is any experience involving wagering, risk, or betting of money or other valuables on an activity of chance where money may be lost. And so just kind of from your experience, how do you see then that day trading and cryptocurrencies kind of can fit into that definition?
Bitcoin is really an anomaly with all of the cryptocurrencies out there, but the day trading, where you think you're going to find that one stock or that one opportunity where you're going to hit and it's going to go up and you're going to win. If there's only a 5% chance or 1% chance that that's going to happen versus 99% chance you're going to lose your original money you put in, to me, that's gambling. It's really speculative. And it's not that's not something that you should stay away from, but it depends on your particular situation. So if you can afford to do that and you want to take a risk on a couple things, because you can, and it's not going to impair your life, feel free. I don't know anybody though who goes and throws money in the garbage. Like, they're usually doing this with education and making reasoned, calculated risks. Right. So if you've got a 1% chance and you're throwing a lot of money into it, that sounds a lot like gambling to me. And so as a day trader, unless you've been doing it for a long time, I don't think that the majority of Canadians that we heard who started day trading with their government supports through COVID, they're not the ones who are making it big, and they're not hitting the mark and getting those huge gains. And then what happens is then that's causing issues, because those government supports were in place to pay mortgage payments, pay for rent, car payments, food, whatever maybe your family needs. And so all of a sudden, then there creates a real issue in your life. Okay.
And so you were saying then you have some principles that you follow and you recommend around healthy investing. Tell me more about that.
And so just on investing, and when we're looking at the things that we might put around it, kind of like parameters, we'd want to think about the amount of risk we're taking. So is there a 50-50 chance that we're going to make money, or is it more like 99% chance we will? We want to look at how long we're going to hold the investment. And so often with day trading, it's getting in and out of the market very quickly, because we're trying to time it. So we want to think about that. And then also just what's the source of the returns. With a stock, when the value goes up, if we sell it, we get that appreciation that way. But sometimes when we're holding stocks for the long term, we might get money into our portfolio by dividends or interest payments. So something to think about like that. Now, when I think about investing though, what I really want everyone to start with, as I said, is their goals. And when we think about that, we're trying to think about what's our risk tolerance. So like I've been mentioning, do we have flexibility in our budget if we were to lose this money? So our risk tolerance is going to dictate, in part, what we actually invest our money in. So if I need this money in 60 days to pay off my mortgage, I shouldn't be getting into something where I might potentially lose the full amount, because that won't help me on that 60th day when I've got to pay my mortgage. So for different goals in your life, you might have different risk tolerances. If you're saving up for retirement, you probably can take a little bit more risk if that's 20, 30, 40 years into the future, versus if there's something that's happening in the near term. So you've got your goals, you think about your risk tolerance, then you think about that time horizon, which also ties in, like I was saying, to retirement. If we've got 40 years, we can weather fluctuations up and down in our investment portfolio, versus if I need that money in 60 days, I can't really do that. So all those three things come together are really the basics for investing. And it's easy to get caught up in social media, listen to the news, see what everybody else is weighing in on, and try to get involved. And people have a lot of fear of missing out, FOMO, when it comes to these big returns that people are making. But if you stick with your own goals and how you're going to hit your goals, you're going to be so much better off, because you're the one who needs to be happy, whether it's you, your family, your friends, and taking care of yourself, and your goals should be first priority.
Great. And so the people listening to this podcast, either they themselves might have got into some problems with gambling, or they're concerned about somebody else in their life who has. And so anything else you want to just add when people have had gambling get out of hand and now they're considering perhaps stepping into more speculative areas of investing? Any just suggestions you want to pass on?
Absolutely. So bring it back to the basics, your objectives, your risk tolerance, your time horizon. The second one is to use caution when you're hearing hot tips. So if somebody's telling you about the thing that you can't lose on, that's a red flag, and that should signal something in your brain that you're like, okay, I probably shouldn't jump into that unless I do my own research and I think it's reasonable. So stay away from hot tips. Make sure you can validate the information. There's a lot of people out there providing advice and opinions, and I've talked about it before, but I could give advice on how to cut hair. And I could tell you, Adrian, how would be the best way and how I would do it and the kind of equipment you should buy and the right scissors and the right chair. I'm not qualified to give that advice. So somebody might take mine, and I'm sure I could sound really confident about my advice, but someone taking it doesn't, unless they validate me and my credentials, they don't know that I have no business giving that advice. So you need to always validate the source to make sure that's happening. If you do want to get involved in investing, start small. Make sure education is a part of that piece. So if things are starting to get a little bit out of hand, couple things that can help. Number one is having an accountability buddy. So if you're jumping into the next thing, you think you've got something solid, talk about it with someone you know and trust, who will say, Adrian, I'm not sure that's really the best thing. Have you thought about this and this and this? Maybe even you might give them a list of questions to ask you when you go to them. So it might be, okay, Tracey, if you're taking that $1,000, is there something else that you need that money for? What will happen if you don't get it back? Have you thought through that? Will that hurt someone, the impact of that money not being there? Because sometimes our actions are going to hurt others. So if you gave your accountability buddy kind of those questions in advance, you would be then almost putting the brakes on yourself, but you have that person to ask you the hard questions. The other thing that is really important is to mind your own business. Stop being consumed with what everybody else is doing, the money they are making or what their investments are. People only brag about the things they do well. So most of the time people are silent. So you don't want to be wading into everything you think you're seeing on social media. And as somebody who gets to see behind the scenes on people's financial situations, what is shown out there and what people talk about is not very much the same story. You don't know how somebody is funding that vacation or that home they have. They might be one missed paycheck away from filing for bankruptcy. So we don't want to get involved in other people's stories. We don't want to it's hard sometimes not to feel jealous or envious of what they've got, but we want to focus on ourselves. How can we get the things that we want? And how can we get a plan to make sure it's happening? And we don't need to do it alone. So if you're not sure very much about investing, talk to a financial planner. There are fee-only planners out there where you don't actually have to make investments with them. There are a lot of great podcasts, YouTube videos, books out there where you can bring up your education before you actually jump in and start wagering money. A great example for people who want to get started is even to do some things on paper, pick out some investments and follow them for a little while and see what happens. What would have happened if you took that $1,000? And then certainly if you find that it's getting out of hand, certainly reach out to a professional who can help you. Number one, to manage any gambling challenges that you may face, or if you're also facing too much debt, you want to get in touch with a credit counselor or licensed insolvency trustee who can talk to you about your options. Because sometimes we can get in a hole that we can't get out of, and we need somebody to help us be able to clean the slate, and that's okay. So not to feel ashamed about that, and to ask for the help is really important.
Wow, those are great suggestions. And so if you are somebody that people are interested in following and continuing to learn from, how can they do that? How can they learn from you?
Best place is on LinkedIn. So Tracey has an E and Bissett has two S's, two T's. From there, you'll be able to get all my social information and my website. We have a weekly podcast on Young Money, so you can check out all the episodes. In fact, we recently had an episode on NFTs, which is another thing that some of your listeners may be very interested in. It's this new thing that everybody's kind of doing, non-fungible tokens, and it's actually digitizing things like artwork or a great shot in basketball. And so people are able to sell these digital either prints or shots or videos, and they're selling them for a lot of money. So people are jumping on this as kind of a new way to collect things like we would collect baseball cards, but it's kind of covering lots of industries, and that itself is a speculative thing because people are spending an awful lot of money. So we're covering everything that's current, and so for people who want to learn more, check out the podcast as well. And certainly we'd love to hear suggestions from people. We bring a new show every week. So if there's things you want to hear about, please send me a note on LinkedIn or any social media.
Wonderful. And so I'll, of course, include that in my show notes as well, so people can find you in all those different places. Once again, Tracey, thank you so much for just joining us in this really timely discussion today.
Thank you so much, Adrian. The key is to be kind to yourself. We can only take one step forward every day with our financial fitness. So if you make a mistake, get back on track and give yourself, cut yourself a little bit of slack.
Great. Thank you.
Thank you.